Today, oil prices jumped to a 7-year high after some of the world's largest oil producers halt talks. We explain why you could see $5 per gallon gas here in the U.S. Plus, shares of Chinese ride-hailing company Didi plummet as regulators shut down the app in China just 1 week after its IPO in the States. And finally, the Pentagon throws out its controversial JEDI contract with Microsoft. I'm Mackenzie Sigalos, and this is CNBC After Hours. It's a mixed day for stocks in the first trading session following the July 4th holiday. The Dow lost about 0.5%, while the S&P snapped a 7-day winning streak. The Nasdaq, meanwhile, posted a new record close. All eyes were on oil, though, which surged to a 7-year high in recent days, thanks largely to stalled talks between the world's largest oil producers. Members of the Organization of Petroleum Exporting Countries, or OPEC, failed to reach a deal to increase the world's oil output and meet rising demand. Now, that means that as we hit the height of summer travel and more people returning to work, the supply of oil likely won't keep up. That's led experts to warn that oil prices could go even higher, and a gallon of gas could cost some Americans upwards of $5. We asked Pippa Stevens to explain the stalemate.
The oil market has been thrown into a little bit of turmoil here after a meeting between OPEC and its allies ended without an agreement on production policy for August and beyond. So basically what happened is the group was slated to meet last Thursday to decide on production policy beginning in August. And talks were only supposed to be 1 day, and it was supposed to be relatively straightforward. Analysts were expecting the group to boost their production output beginning in August, and it was supposed to go off without a hitch. But this being OPEC, there was a little bit of drama where the countries just did not agree on a policy. So essentially, there are two proposals here on the table that the majority of the OPEC nations agree to, and that is to increase production by 400,000 barrels per day in August, and then each month through December, so that would add about another 2 million barrels per day of production to the market by the end of the year. That's the first proposal. The second proposal is to extend the current production cuts, which are slated to last until April of 2022, until the end of 2022. So that would be to ensure that some of that production is still held back as the global economy recovers from the coronavirus pandemic. What happened was that the United Arab Emirates did not agree to that second part, that agreement to extend the output production cuts through the end of 2022, they said was not fair. Essentially, they've invested billions of dollars to boost their production capabilities. So they say that that agreement is based on their prior output levels. Now, they asked for that, and that request was denied for several reasons. Of course, if they get a reevaluation of their baseline quota, then other countries are going to ask for a reevaluation of theirs as well. So ultimately, the talks ended without a consensus and really threw the oil market into turmoil. This meeting that ended without a consensus comes at a really pivotal time for the oil market. Prices are now in the $70 region, and that supports a lot of production. So previously, we would have seen other producers pick up the slack. So the United States, for instance, could have ramped up production. But this time around, things are a little bit different because investors in the US and elsewhere around the world are prioritizing companies that are being really strict about their balance sheets, that are paying out investor dividends. And so investors don't necessarily want companies to open up the taps. And so as a result, US production is still below its prior high, and other producers around the world are also curbing output, which means that prices have gone up in a pretty steep line up. What's happening with OPEC and its allies can seem really far away and not really relevant to average Americans, but we're already feeling it at the pump, and the national average for a gallon of gas is now $3.13 according to AAA, and that's up more than 40% in the last year. And prices really vary depending on where you are in the country, and some places in California are already paying more than $5 per gallon of gas. And this can trickle down to the amount of disposable income people have and where they're spending their money. And if oil prices continue to rise, those gas prices could climb even higher.
Okay, let's get to the numbers round. We'll start with 20. Less than a week after Chinese ride-hailing app Didi went public in the U.S., its stock spent the day in free fall. Shares plummeted around 20% just in today's trading session after Chinese officials banned the app nationwide. Now, regulators apparently warned Didi to delay its IPO weeks ago because the company's data collection practices were under scrutiny. Similar names felt the pain too, as fears of a Chinese crackdown led investors to flee stocks like Alibaba, Baidu, and Tencent. Next, $25 million. AMC may have cashed in on the Reddit craze by issuing more shares in June, but the company is backing away from the chance to do it again. CEO Adam Aron took to Twitter to announce that the company would not hold a vote to issue 25 million new shares of its common stock after investors raised concerns. Aron said, quote, "It's no secret that I think shareholders should authorize 25 million more AMC shares, but what you think is important to us." AMC stock has rocketed over 2,000% higher this year thanks to the Reddit frenzy. And finally, $10 billion. After months of controversy, including claims of political interference from the Trump administration, the Defense Department has canceled its $10 billion cloud computing contract with Microsoft. The Joint Enterprise Defense Infrastructure Contract, or JEDI, saw fierce competition between cloud giants Amazon and Microsoft. It all culminated in a lawsuit from Amazon in 2019, claiming that the government, then with Donald Trump in the White House, was biased in choosing Microsoft as its cloud supplier. Despite the cancellation, the DoD did say that it's still shopping for cloud computing providers, so the fight is far from over. You can catch up on all the latest in the cloud computing battle by going to CNBC.com and downloading the CNBC app. That's it for After Hours. We'll be back here every Tuesday and Thursday, so be sure to catch us then.